Our mission at Resilient Advisor is to have a significant impact on the retirement crisis by educating and empowering financial advisors to better serve their clients. In the new Resilient Advisor series, How I Serve, we interview top financial advisors who are making a difference in the lives of their clients.
Thanks for tuning in to this episode of the Resilient Advisor Show. This episode is part of the How I Serve series, where I interview top financial advisors. We talk about how they built their business and how they serve their clients. My guest for this episode is Michael Kreimer, CEO of AssetWise Financial. Michael, thanks for joining us.
Thank you, Jay.
All right, so let's start where it all began. What attracted you to the financial services industry? How did you get in and how did you grow your career?
Well, it's a good question. I started literally right out of college. A friend of mine had started at a local bond house in New York, and he was doing a lot of at that time very high interest rate, double digit interest rates in the 80s, and he was doing a lot of government guaranteed bonds and municipal bonds. And when I graduated, he convinced me to join him, and that's exactly what I did.
So you were selling bonds when you got started in this business.
Yeah, it was great because I didn't have to worry about the stock market. I didn't have to worry about all the things I worry about today.
So for the millennials watching the show, they can't fathom what you did when you started your career. And I started in the 90s selling stocks the exact same way. What was a typical day like for you starting your career on that path?
Well, at that time, we were a very heavy advertiser on CBS radio. So we advertised Ginnie Mae's at 16% interest. And honestly, it's in hindsight, I guess it was very fortunate because we were able to get a lot of leads, a lot of interested people around the country. And we were able to open a decent amount of accounts on a daily basis and fulfill their needs.
Yeah, 16% Ginnie Mae's. Could you imagine how easy it would be to start new relationships today with that type of paper and inventory?
Yeah, just talking about it's a big throwback for me.
All right, so let's walk through the progression from there. So you were doing that in which part of the 80s?
Really, I guess mostly the late 80s.
Okay. And then as you went into the 90s, how did your business evolve and where were you working?
Well, what happened was at that time, A.G. Edwards was a national firm, but they had very little presence in New York. And a fairly new branch manager introduced himself to me, and we spoke for a few months. And at that time, it just felt I needed to take my next step. And that's exactly what happened. I joined A.G. Edwards, and I worked there as an advisor for 10 years. And then the 10 years after that, I was promoted to being a branch manager out in the Hamptons of Long Island, which is another interesting, as you can imagine, that's an interesting location.
Yeah, I'm sure it is. So about 20 years with A.G. Edwards.
Yes.
In a branch manager capacity. And I can tell you from my days 25 years ago as a wholesaler, I always found during that particular period of time, A.G. Edwards advisors were some of the happiest advisors in the country. The company really took care of their employees, both from a compensation standpoint, retirement plan, the way they handled internal conflicts and helped you take care of your clients. Was that your experience with the firm?
It was I still say to people, it's really the best full service financial firm I believe ever in the country. They had the least conflicts of interest. What you said, everyone was well paid. Everybody, exactly what you said. Everyone was well treated, and everyone was happy. It's great.
Yeah, that's right. All right. So, what came after A.G. Edwards?
Well, at that time, A.G. Edwards was one of the oldest firms in the country, and succumbed. They got a new CEO, and he ended up selling to essentially what ended up becoming Wells Fargo. And the culture changed, so I knew I had to change. And it was also time to leave the Northeast. So I took my family. I moved to North Carolina, and I went to Raymond James and became an independent advisor.
So you left a place where you had an established footprint for almost 2 decades and moved to a place that really couldn't be any further different to the
Yeah.
southeastern part of the United States.
Yeah.
So what year did you make that move?
That would have been, well, I moved in '07.
Oh, so right before the financial crisis.
Yeah, and then I changed to Raymond James at the low, which would have been March, April of '09.
Okay, so did you move down south with A.G. Edwards?
Well, it gets a little convoluted. So what happened is I moved south with A.G. Edwards, but they were just changing the branding to Wells, and so I wanted to move my family first before I made a big career change. So I hung in there as long as I could before moving Raymond James.
So for younger advisors listening today, like there are very few that have experienced a period of time as volatile as '08, '09, and then 10 in the recovery. And not only did you go through that, you also went through a location change and your family's changed. There was a lot going on. How did you manage through that period of your life?
Well, as you can imagine, a little bit of anxiety here or there. The best part of it was moving south. That part made the anxiety less. The change of pace from New York to the south made the experience a little bit easier. If I had tried to do the same thing up north, I think it would have been worse, for lack of a better answer.
Yep. All right. So the move to Raymond James, what prompted that?
Well, I had started to look around, and I'm a researcher at heart, so I did an immense amount of research on all the firms, and in speaking to people who had made the similar move, I realized that the next progression was indeed going independent. It freed me up from all kinds of little things. It allowed me to have more products, the feeling of having less of I hate to say quota, but you know what I mean, a little less of a quota. I was just more independent, more free to help clientele. That's really what it amounts to.
Well, and the ability to serve your clients in a more of a fiduciary capacity.
That's exactly right. Yes.
Yep. And then so Raymond James was one of the better platforms in the marketplace when you were making this transition. Did you go to the RJFS side of the firm?
No, I never went there. I went straight to the independent side.
Okay. So did you drop your Series 7 license?
Well, so to finish your original question, a few years ago, I changed divisions within Raymond James, and I went to the IAD division. So I left the independent advisor division. I went to basically the RIA, Registered Investment Advisor division of Raymond James, furthering my independency.
Yeah. So you switched over to the IAD division and you partnered with a larger RIA to help facilitate that.
That's right.
So let's talk about your decision to go to IAD and pure RIA first. What were the deciding factors in that decision?
Well, really too many to enumerate in this one conversation. But it basically freed me up even more. So when you're at Raymond James, Raymond James is a great place. I'm not going to say anything negative. But like most firms, they have a finite package of investment products, we'll call it. And when you make that next move, it opens you up. Now you can literally, if you feel that there's a small manager somewhere in the Midwest, that's great. I'm permitted to do it. I just have a lot more access, more freedom. All the bigger firms, unfortunately, they have, scale issues. They can't just use any product out there because Raymond James has 7,000-8,000 advisors, so they can only use a certain finite amount of managers that are out there, and I just didn't want to be encumbered by that. So that's one of the reasons. The other reasons that it also allowed me to use other. I could change chief investment officers. I didn't just have to use one. I can hire and fire a chief investment officer at will because I outsource it.
Yep. So the flexibility that it gave you drove that decision. So
100%.
So what year did you launch AssetWise Financial, and How did you come up with that name?
Well, let's see. I guess it's 3 years now, and um, probably have to ask Madeline, my wife and assistant. I spent literally hours and hours and days and weeks and probably months. A lot of I didn't want to. I didn't want to make it Charlotte Wealth Management, Kreimer Wealth Management. I wanted to make it something a little bit different I hadn't seen before, um, and also, a little bit more dynamic, for lack of a better word, and something that just I hadn't seen before. There's a lot of firms out there that sound very similar to each other. So I, I took a book of synonyms and I started putting things together, and I just all of a sudden I put that together, and for some reason I really liked it.
So, Michael, when I ask that question, I usually get one of two answers: a long-winded explanation as to the hidden meaning of something through Greek mythology or something that is important to the advisor, or what you just gave. I played around with a bunch of different ideas, and this is what I came up with. So,
Yeah, that's
all right. So, AssetWise was launched about 3 years ago, and
yeah.
let's dig into the firm, what it looks like, and what services you offer. So, tell me what's the value proposition for investors doing business with AssetWise Financial?
Well, that's a good question. The primary ones would be independency from the standpoint of product. I don't have any. I mean, it doesn't make a difference. I'm fee based, so I don't get compensated per um, uh, per per
Transaction.
product commission. That's right. Similar to that commercial. We do better if you do better. I steal that a lot. Also, what most clients like about me, this is what they've always told me, is twofold. One is I have I have a little bit of a sense of humor. I like to tell some jokes, some interesting stories and whatnot. And then the other one is extreme candor. I'm very candid. I'm not scared to tell a client when they're if they came with an idea of their own, and they pursue it when I know it's wrong. I really don't have any problems telling them, what I really think about it and what it could really do to them, and how it could harm them if they're not careful. So those would be the primary. So I don't know if I answered your question, but those would be the primary two things that people say.
So, in addition to investment management, do you offer financial planning?
Great question. Yeah. So yeah, I don't start any engagement without at least some financial plan. As you can imagine, I can't. What a financial advisor can do, make recommendations on a portfolio or anything else without knowing the background of the client, right? You have to know everything. I mean, geez, client may say they're aggressive, and then you find out later that if they lose 5%, they panic and sell. I mean, there's so many psychological things that go on, and then how can you recommend a certain asset if their balance sheet it looks off? So, for instance, they have debt of $1 million, they only have assets of 500,000. Those types of people need candor more than most.
Yep.
And then you have the other side. Believe it or not, a lot of clients that a lot of clients, when they get older, it's very common for them to actually spend less and actually be very fearful of the future and scared to spend their money. And I have to constantly remind them the opposite. I say, listen, you did your job. You built up this nice pot of wealth. You're such and such age. Even if you made 0% interest, it would take you 100 years to spend it all. Enjoy your money. Go enjoy your life, please. So I don't know. Again, that's the best way I can answer that question.
So let's talk about your tech stack that you use to serve your clients. What are you using for financial planning, portfolio accounting, and what other vendors do you use to help support your clients?
Well, I have access. That's an interesting question because I actually have access to several. So I tend to use different ones predicated solely on the case that I'm doing. As you can imagine, some clients have easier cases, and the Raymond James has a different planning software called Gold Planning and Monitoring. Then I have some other software that I use that my RIA favors. Then there's even more software on Tamarack InvestNet. So software isn't a problem. I've got tons. Then I still do, believe it or not, old school. I still do, after I do that, I generally do my own spreadsheet analysis that I share with the clients. Some people, as you can imagine, everything's a lot of investor psychology. Some people want a 100-page document full of color charts and everything else. And some people really dislike that. They really don't want that. They want to see everything on a one-page spreadsheet for simplicity's sake, et cetera, et cetera. So I have a tendency to acclimate to the client and their personality as best I can. If it gets a little complex, that might change things. But other than that, that's what I do. I'm a little bit of a chameleon because I have to be.
Yeah, Michael, we've seen that as a very big trend in the industry over the past 18 months. The one-page financial plan, the asset map tool, things that just make the client's experience of understanding their financial footprint much easier than that 300-page book we used to put in front of clients. Yeah. So you had mentioned OCIO services. Do you currently use an OCIO manager?
Yes, I use a company from Raleigh called WealthShield. It's as a matter of fact, I think the CEO has been on your show, Clint Sorensen. He's been fantastic. It's been a great relationship. I mean, it's really been good. Yeah, it's probably the highest level information I've received and tools I've received. As you can imagine, the larger investment firms, because they have thousands and thousands of advisors, they literally do have to keep it as simple as possible. It's not their fault, but things are a little bit too simplistic. And in today's world, I mean, we see everything going on globally and everything else. I mean, there's literally, I've never seen some information is moving so fast. One day it's this, one day it's that in different countries. And if you don't have that extra level, I think it's very difficult to make sound decisions on behalf of clients. It's very common for the stock markets, although all the markets, to go sideways with a lot of volatility for over a decade. We've been very blessed with the last 12 years. It's been pretty much straight up. And I believe a lot of younger advisors and even some clients, I think they've unintentionally learned a bad lesson. It's kind of like going to Atlantic City and then you win 10 times in a row and now you think you're a professional gambler. That's just, it's just circumstances. The Federal Reserve has done a really good job of keeping this thing going. But it won't stay that way. It never does. So I think all my experiences really, I believe they're going to really help me and my clients for the next decade.
Michael, for listeners and viewers who do not have experience working with an OCIO, and that was a leading question because Clint Sorensen has been on the show before, and I know that you guys work together. Sometimes it's hard for somebody who has never worked with an OCIO to understand the value proposition, what you get as an advisor working with an OCIO. Could you kind of put some color on what that experience is like?
Yeah. All right. So as you can imagine, it seems that most advisors work for the big firms, and as you can imagine, it's not like the average advisor, or even most advisors, can just call the head economist, the head strategist, the head anything, and spend some time with him and gain some knowledge. They basically get a document they have to get from their own intranet. And again, it's dumbed down a little bit to make for easy reading for all the advisors. So by having an outsourced CIO, I have significantly more access. I have he basically gives me significantly more time, and the resources that I have are just higher, and that's really it. Again, if you work for a bigger firm, you just can't change the lead economist. If I don't like my CIO or what I see, I can essentially snap my fingers and get a new one. I mean, that's freedom.
Yep. Yes, it is. Another firm you partner with for your back and some of your middle office is Eudaimonia Partners as an aggregator.
Yes.
Tell me, how do you associate with them?
So, so when you're in the RIA space, the big decision you have to make: are you going to register with the SEC or the state, or however you're going to, however you're going to register your firm? Now, you can make a little bit more money doing it that way. The negative is you have to do your own compliance, and it's very time consuming. And if you have clientele, I don't know how you really would do both. So you're right. I'm together with Eudaimonia. And then the other thing about engaging with an RIA, you really need to understand what you asked me before. What is their tech stack? What are their resources? So through them, because I think we're over $1 billion in size now. I mean, the pricing we get, the various vendors. I mean, and just like I can hire and fire people, they can do the same. They've already changed, a couple of companies here or there to improve. So it's been fantastic.
Yeah, you can learn more information about Eudaimonia by visiting EudaimoniaRIA.com. Michael, I'm going to wrap up with 3 questions I like to ask on this particular series.
Okay.
So first, what's been the biggest challenge for you as a financial advisor in your career?
Well, that's pretty easy. I can tell you everything that I saw and experienced in 08, 09. There were things that occurred that we were taught through what you said before, Series 7, the books, you could go to some of the finest universities, and there are things that occurred that they don't teach. Were first time events. And that made it very difficult. A lot of advisors, older advisors, if you talk to them, some of them still today are a little bit shell shocked from the 08, 09 experience.
And what should new advisors be thinking about today? And I'm talking about somebody less than 5 years in the business. They're going to be in this industry long after you and I are gone, Michael. What do they need to be thinking about today?
Well, so I would say this, definitively to speak to advisors and people who've been in the industry a long time, their experiences. So because eventually interest rates are going to rise. Eventually we're going to have a bear market. Eventually things are going to, have mean reversion. So that's all coming our way eventually. When? We don't know. But I would say don't assume that the type of market we've seen for the last, decade or so is going to stay that way. That obviously is recency bias, right? Just do as many things as you can to protect your client's assets on the downside should that event or when that event eventually occurs. It's better to do it now than waiting, because you can imagine, right? If you have capital gains and then you're forced to sell, you could unintentionally, if you have to all do it at a very short time period, you could unintentionally hurt the client tax-wise if it's a non-IRA account.
Mm-hmm. All right, Michael. And so the last question, and we're recording this at the end of 2021. What are retail clients not thinking about today that they should be, in your opinion?
I would say pretty much, I would say what I find is they've forgotten 08, 09. They've forgotten from 2000 to 2002, the tech bubble. It seems that, as they're human. So humans are famous for fear and greed. So I can sense it on the telephone and the Zoom calls. There's a little bit of greed going on now. They've forgotten we haven't really had a really big correction in a long time. I would just say that, don't get too comfortable. Be a little bit cautious. Don't get too speculative in this marketplace.
Excellent. To learn more about Michael Kreimer's firm, AssetWise Financial, please visit AssetWiseFinancial.com. That's AssetWiseFinancial.com. Michael, thanks so much for coming on the How I Serve show.
Thank you, Jay. It was a pleasure.